Folks, let me tell you something that could change your financial future. Watch me reveal the secret to creating a dividend portfolio that will keep growing your passive income effortlessly. Imagine waking up every morning to find money in your account. That's not a dream, it's the power of dividend investing. Now I know what you're thinking, Mike, that sounds too good to be true. But hear me out. Dividend investing is like planting a money tree in your backyard. You nurture it, watch it grow, and before you know it, you're harvesting dollar bills. It's a way to build wealth slowly but surely. And the best part? You don't need to be a Wall Street whiz to do it. Building a dividend portfolio is about creating a steady stream of passive income. It's about making your money work for you, instead of you always working for your money. And that, my friends, is the key to financial freedom. In this essay, we're going to walk through how you can build your own dividend portfolio. We'll keep it simple, no fancy jargon. Just straight talk about how to set yourself up for a more secure financial future. So let's get started on your journey to financial peace. Let's start with the basics. What exactly is a dividend? Think of it as a reward for being a partial owner of a company. When a company makes a profit, they sometimes share that profit with their shareholders. That's a dividend. It's like getting a slice of the pie just for owning a piece of the bakery. Now, not all companies pay dividends. Some prefer to reinvest all their profits back into the business, but those that do pay dividends are essentially saying, hey, thanks for believing in us. Here's a share of our success. It's a way for companies to attract investors and show financial strength. Dividends are usually paid out quarterly, but some companies pay monthly or annually. The amount you receive depends on how many shares you own and the dividend rate set by the company. It's like a regular paycheck from your investments. Understanding dividends is crucial because it's the foundation of your passive income strategy. These regular payments can add up over time, providing you with a steady stream of income. And that, my friends, is how you start building real wealth. Now let's talk about research. I know, research sounds about as fun as watching paint dry, but trust me, it's the secret sauce to successful dividend investing. You wouldn't buy a car without looking under the hood, right? The same goes for stocks. Start by looking at a company's dividend history. Has the company consistently paid dividends? Have they increased their dividends over time? Companies with a track record of steady or increasing dividends are often called dividend aristocrats. These are the cream of the crop in dividend investing. Next, look at the company's financials. Are they making enough money to sustain their dividend payments? A company that's struggling to make ends meet might cut their dividend to save cash. You want companies with strong cash flows and healthy balance sheets. Don't forget to consider the industry and overall economic conditions. Some sectors, like utilities and consumer staples, are known for stable dividends. Others, like tech or energy, can be more volatile. Remember, your goal is steady, reliable income. So do your homework and choose wisely. Alright folks, let's talk about a word that might sound fancy, but is actually pretty simple: diversification. In plain English, it means don't put all your eggs in one basket. When it comes to building a dividend portfolio, this is crucial advice. Diversification is like creating a balanced diet for your money. You wouldn't eat only broccoli, right? Similarly, you shouldn't invest in only one type of stock. Spread your investments across different sectors and industries. This way, if one area of the market takes a hit, your entire portfolio doesn't crumble. Consider investing in different types of dividend-paying assets too. This could include stocks, real estate investment trusts, REITs, and even some bonds. Each of these can provide dividend income in different ways, adding another layer of diversification to your portfolio. Remember, the goal is to create a steady stream of income. By diversifying, you're reducing your risk and increasing your chances of consistent returns. It's like having multiple streams flowing into your river of wealth. And that, my friends, is how you build a robust dividend portfolio. Selecting dividend champions, history matters. When it comes to picking stocks for your dividend portfolio, history matters. Look for companies with a proven track record of increasing dividends over time. These are often called dividend champions or dividend aristocrats. They've weathered economic storms. Companies with 25+ years of dividend growth are elite. Focus on the rate of dividend growth too. Bigger increases can add up over time. Past performance doesn't guarantee future results, but a long history of growth indicates financial health. Reinvesting dividends. Compound your wealth. Let's talk about a powerful wealth-building tool: dividend reinvestment. This is where the magic happens. Use your dividends to buy more shares. It's like planting seeds to grow more trees. Many companies offer drips. These plans buy more shares, often without fees. It's a hassle-free way to grow your investment. You're taking advantage of compound growth. Over time, this snowball effect can significantly boost your returns. Reinvesting early can rapidly grow your wealth. It's like giving your money superpowers. Regular portfolio checkups. Stay on track. Building a dividend portfolio isn't a set-it-and-forget-it kind of deal. It's more like tending a garden. Regular checkups are crucial. Review your portfolio every quarter or at least twice a year. Look at stock performance and dividend payments. Check for red flags in financial reports. Adjust your holdings as needed. Aim for a strong, income-producing portfolio. Rebalance to maintain diversification. Keep your financial garden healthy and thriving. Building your dividend portfolio. Getting started. Alright folks, now that we've covered the basics, let's talk about how to actually start building your dividend portfolio. Don't worry, you don't need a fortune to begin. You can start small and grow over time. First, decide how much you can invest regularly. It could be $50 a month or $500. Whatever fits your budget. Consistency is key here. It's better to invest small amounts regularly than to wait until you have a large sum. Next, choose a brokerage account. Look for one with low fees and a user-friendly platform. Many brokers offer commission-free trading now, which is great for dividend investors who might be buying stocks frequently. Start with a few well-known dividend payers. Companies like Johnson & Johnson, Coca-Cola, or Procter & Gamble have long histories of paying and increasing dividends. As you learn more, you can expand your portfolio to include a wider range of stocks. Patience and consistency, the keys to success. Now let me tell you something important. Building a successful dividend portfolio isn't a get-rich-quick scheme. It's a slow and steady process that requires patience and consistency. It's like losing weight. You won't see results overnight, but stick with it, and you'll be amazed at the transformation. Consistency is crucial. Set up automatic investments if you can. This way, you're regularly adding to your portfolio, regardless of what the market is doing. It's like watering your financial garden, even when it's not sunny outside. Patience is equally important. Don't panic if the market dips or if a stock price drops. Remember, you're in this for the long haul. As long as the company's fundamentals are strong and they're still paying dividends, stay the course. Over time, you'll see your dividend income grow. It might start small, maybe just a few dollars a month. But as you reinvest and add to your portfolio, it can grow into a significant income stream. That's the power of patience and consistency in dividend investing. Avoiding common pitfalls in dividend investing. Let's talk about some common mistakes to avoid in dividend investing. Knowledge is power, folks, and knowing these pitfalls can save you a lot of headaches down the road. First, don't chase high yields blindly. A super high dividend yield might look tempting, but it could be a red flag. It might mean the stock price has dropped significantly, or the company is paying out more than it can afford. Remember, a sustainable lower yield is better than an unsustainable high one. Another mistake is neglecting diversification. Don't put all your money in one or two stocks, no matter how good they look. Spread your investments across different sectors and even different types of dividend-paying assets. Avoid timing the market. Nobody can predict short-term market movements consistently. Instead of trying to buy at the perfect time, focus on regular investing and holding for the long term. Lastly, don't forget about taxes. Dividends are generally taxable income. Consider using tax-advantaged accounts like IRAs for your dividend investments when possible. Always consult with a tax professional for advice specific to your situation. Your path to financial freedom. All right, folks, we've covered a lot of ground. Building a dividend portfolio might seem like a big task, but remember, every journey starts with a single step. You don't need to be a Wall Street expert to get started. You just need patience, consistency, and a willingness to learn. A well-built dividend portfolio can be your ticket to financial freedom. Imagine a future where you have a steady stream of passive income growing year after year. That's the power of dividend investing. It's not about getting rich overnight, it's about building wealth over time. Remember the key points. Do your research, diversify your investments, reinvest your dividends when you can, and stay patient. Regular checkups on your portfolio will keep you on track. And always be on the lookout for learning opportunities to grow your investing knowledge. So, what are you waiting for? Start small if you need to, but start today. Your future self will thank you for the financial security and peace of mind that comes from a well-managed dividend portfolio. Here's to your financial success.